evening. Sorry. Just a quick video here on earnings day for Super Microcomputer SMCI. We're here just going to have a look at the underlying. A lot of people spend their time looking at the fibs and that technical analysis, and I'm not saying anything about that because we can see the technical analysis playing out in the underlying, and really the underlying, as far as I'm concerned, is not just shares nowadays. It's really what pulls the shares around, and that's the hedging, and so much of the hedging is caused by options. So I like to see liquidity in the underlying as liquidity, and then also in the number of open interest contracts, OI contracts. Anyway, so we're just looking at an interesting stock, and we can see some interesting things here. We see a great change in liquidity, and it had been changing over a period of time without a lot of price discovery in late 2022, and that was really due to the change in legislation in the Superconductors Act in the United States, and the not selling any more superconductors, NVIDIA especially, and the higher quality artificial intelligence chips to China, and that put the price of these better quality chips through the roof. And so this was one of them, and we saw these incredible gains. And this is one that was gamed by liquidity. Very interesting, and a lot of us wish we had watched this during its game, because there was a big period between August 23 and when it finally took off in January 24 where we had seen very little price discovery, and then all of a sudden we saw incredible price discovery. And just the fact that we hadn't seen price discovery in such a downward market should have been a good pointer. It probably was to everyone who was smart enough. Very interesting to watch these sort of things take off, and I wonder whether any of the things we're changing in the current legislation between rockets and electronics and software in the United States to make America great again is going to see similar reactions in prices here. It's always interesting to see which of these have been not having any price discovery over a period of time, so they've had strong bottomings coming into this period now where we've got different legislation and politics going on. So we can see here in liquidity, in the irregular liquidity, this is showing us. I'll just click this out to week. I know I'm on weeks. We can see this is was very irregular illiquidity, or liquidity, very irregular here, and this was very illiquid at this point down here in the green, and then we've gone through a period where that's dissipated out, and we would have seen, if we were looking at the price, we would have seen some increase in price. While that dissipated out, we've seen the price rise, and then we've had to have some more tightening along the way. And as that's risen up, and we can sort of have a look at this basically at a 10 to 1, we can see these periods where it's risen up and it's had topping and oscillation, and here we've had a whole lot of topping, but the price is still going to rise because it's come from a place of much lower liquidity. So we're still going to have the price rising because we're still trying to get back. It's the balloon underwater effect. It's still trying to rise, and every now and then we just right on the surface liquidity, there isn't another buyer, and so the price pulls back. And we can see for a period of time here there was fewer and fewer buyers as we rose up to this level, and then when we've had an earnings and we've had a loose liquidity for a while, we get this very large pullback, even though it was a good earnings. And the other way around here, we can see that we've had a build here, a tightening in liquidity coming into this earnings, and we've had price go up by 28% on the day. So you can see that here we've had one go down by 23% just because of the range that it was in beforehand. These are really good things to watch the daily liquidity for. You'll be able to find the daily liquidity on the Naked Delta site, nakeddelta.com. We'll be having it up free soon for all tickers, so people can have a look at the daily for doing their planning. So here again we can see there's more charging going on through this period, and we can just steadily see the liquidity edging down before it's really taken off, and it's really taken off here as a reaction. You know, the market makers are having a grab here to hedge, and so we see it getting tighter and tighter until it gets to a point where it starts to loosen, but it's loosening from a very low place. We can see how low it is now, so we can see it takes a long time to loosen, and it's taken all, you know, it's gone past this November top. It's taken to loosen to where this moving average has got us, somewhere in the centre of here. You know, you could have stepped out somewhere between 900 and 1200 here and been very happy with the price increases during that time. And then we've had what we consider reactive liquidity, rather than this liquidity here is causal liquidity. It's buying of the underlying, and then we get the effect of that causal liquidity as we get price discovery going up, and then we get reactive liquidity, and we do in both scenarios, but in up and down. But this reactive liquidity, we've had the price drop down. And with it we're going to get a bounce, and so we've seen a bounce, but it's been a rising flag bounce, and rising flag bounces, they bounce back up to a certain level where they become liquid again, and then they drop, and then they drop down and they tighten, and there might have been some buying of the underlying trying to hold the price, but I expect that this is all just the cause of liquidity. And then we have seen that price get too high again, that liquidity get too loose again, and then we've had price drop off, and again we've seen it bouncing through this period, and it's got really tight as we're getting closer to this split. It's got really tight, and we've still the flag is still been going up, and finally it's just started to loosen off, and it's loosened off from a relatively loose place compared to where we've seen it with its prices before, and it's this little rise here that we can see in the underlying. It's here again, the underlying liquidity here. It's dropped down, and this drop down is a drop back down into tighter liquidity, and we get a bounce, but those bounces are becoming less and less. So we've got a slight rising flags here. We've had a bit of an effect by the splits, probably a large effect. It's got some 12% ups and downs, but that has gone up into a relatively high place again, and that is a sucker. We see that before. We're coming into an earnings. We've had a lot of playing with it. We've had a bit of a market bounce around here at the end of October going into the Trump election, and there was quite a lot of volatility going in there affecting things, and this loose liquidity has really affected here, and we've had prices drop 32%. Obviously a company change on the earnings or something has been the catalyst, but the liquidity was already very loose and waiting for that to happen, and we've seen it drop down. Then we have not seen a great deal of price discovery. It's gone down. It's fallen. It's fallen up minus 18%, and that is because it's still falling into a tighter place. And even though we might consider that is down and should be reactive, the reaction's taken a little while to iron out, and then we've seen it come up to the upside, and now we've had this wonderful washout effect where we don't have a rising flag anymore. We have now got a sinking flag of price, and we have rising liquidity. This loosening liquidity has slowly blown off during this period. It's taken a while to blow off, and we can see it here in the underlying liquidity before the irregular starts to notice it, and we can see it starting to head down, and it's tightened, and that tightening effect we can see in the options as well before we've seen this last little bit here, which is a 60% price increase. So if we just change that over, sorry, too many things on my screen. Here we can see this most recent. We can see the DPI, this buying in this dip. This is why we've had this first tightening in liquidity before it's risen out again, and we've seen this dissipate. And at the bottom of that, we've had a couple more decent bites of liquidity to get it fully charged, and that was around the end of the Jan OPEX, just as we came into that Thursday, Friday with that last one. If we go and have a look at that, OPEX here, this is looking at all of the options. We can see a huge roll off here. We've seen the calls have risen in the money. Calls. I've got a delta filter of 50 delta, 50.50 delta filter on this has gone from 123,000 to 369,000 calls, and the puts have lightened from 410,000 in the money puts down to 358. So it's dropped off somewhere in the order of 20% in that one day, and that we can see that was about here, and that a lot of that will be a lot of that buying back in the sea of the market, and a lot of it might have started here. They've been washing it out for a while. Market makers would have planned this a while ago. They can't make changes like that without big, and that's why we have monthly apexes, because it takes a long time to change the direction of large boats and of the hedging. And when the bigger players come in, the retirement funds, they want to buy off the market and not have price being affected, and this is the buying, and it hasn't affected the price. And again here, this bit of buying here, the market's actually sinking, but these guys wanted to get in because they think that this is underpriced, or that there's going to be a change in legislation or something. This could be the Nvidia effect here that we've seen since Trump has said that we're going to ban DeepSeek, and that this plays in exactly about with the Nvidia call. So we can see that's the Nvidia effect. If we go and have a look in here, this is this runoff that we've had. This is in the longer dated stocks, longer dated options, sorry. And if we have a look at the shorter date, this is calls again, this is puts. If we go and have a look at the shorter dated, the ones that have a larger gamma effect, you can see it's even much more extreme. They've gone from 158,000 to 94,000 very quickly in this changeover, and on the other side they've gone from 28,000 to 125,000 in a couple of days since the end of the month. And if we went back to the OPEX, let's just overlap that OPEX, you'll see that again we had this huge change here from 71 to 130, and in the short positions from 124 down to 65. And you can see that this bouncing around here of price and in and out of the money is one of those things that shakes it up. When you see a change of this sort of size, it is really going to shake up that price, and we get these huge reactive price changes, as we're seeing a squeeze going on now, buying back all of those illiquid that illiquid hedging that was there, and or people who were just selling it short and thought it was going to go on for a while. Alright, I hope I haven't bored you too much. I hope that you've learnt some things there about liquidity and where you can see it in the market. Remember nakeddelta.com and Bruce Gibbs at TradingView. But nakeddelta.com, we will be having the daily liquidity on our site for all tickers. That'll be up within the next couple of days for you to look. Thank you very much for my little video, and good luck trading for February the 11th. Thanks.